And then next 2 points are angel investor and venture capital funds. So write down a tick mark this for exam purpose. Note on angel investors. So from the name you can understand these are really like angels. When nobody comes to help you, nobody is willing to give you money, nobody believes in your idea, these are the people who come forward, open their purse, give you initial capital so that you can start. So they are called angel investors. They are like angels to a small startup company because others may not give them necessary funds. So these are investors who invest in small startup companies. They are usually from friends and family, but not necessarily. The capital angel investor may provide can be a one-time investment. Like your father will give you 50 lakh rupees, go and now you start your own office. But after this, I will not help you. Or sometimes they can provide money on ongoing basis also, so that in the initial years when the company is going through a difficult phase, challenging phase, they will need money at different stages. So some angel investor can provide you more than once also. Just to give you some practical hint, in India some people are well known angel investors. They have really helped many startup companies, and some of these startup companies have got good name in the market now. For example, this Mohan Das Pai, Ratan Tata, Kunal Bahal, Rohit Bansal, Rajan Anandan, Anupam Mittal, Chris Gopal Krishnan, Sachin Bansal, Binni Bansal. If you don't know, these are the founder members of Flipkart. Jishan Hayat, Vijay Shekhar Sharma. Now he is the founder of Paytm and he has invested in all these companies mentioned below, which were startup companies. And you see one big name here is Ola. Because of the angel investor putting money, now this Ola has become one of the big names uh, in the travel industry. Or for example, this Mohandas Pai has invested in Tax Sutra, which now many thousands of CA firms use this website for continuous updates, etc. So rest all you can read yourself, do some research on this. This topic is not just for exam, it is also for your future. Angel investor provide more favorable terms compared to other lenders, right? So they usually charge low rate of interest. They invest in the entrepreneur starting the business usually rather than the viability of the business. That sentence means they will give you capital at the very beginning so that you can start the business. They will not focus too much on the viability of the business at the initial stage, because unless you start the business, how can you check the viability? Let the business start first. So these people, this angel investor help startup take their first step. They help them take the first step, at least give them money so that he can start, rather than the possible profit that they may get from the business. So you can say they are not too much profit oriented. They are not sharks. They are helping people at least to start the business, and therefore this line says angel investors are opposite of venture capitalists. These venture capitalists are people who want a very high rate of return. So they will only try to invest in those companies where they think that this company will have a very high profit potential, right? Angel investors are also informal investors. That means they will not go into too much of formality. angel funders, private investors, seed investor, business angels, whatever you can call them, but more popularly they are called angel investors only. And who are these people? Generally these people are affluent individuals, like few names I had shown you so that you get some idea, some picture. They are wealthy people, they have already achieved success and they have lot of wealth. So now they want to reach out to young people to help them to start their business. They inject capital for startup in exchange for ownership equity or convertible debt. So the investment will be in the form of either equity share or it can be in the form of convertible debt, which will be later converted into equity. And if the company becomes successful, then the value of this equity share will go up and they will earn huge amount of profit. Some angel investors invest through crowd funding platform also. So instead of directly giving funds, they can contribute in the crowdfunding platform. So that is also a form of help only, or build angel investor networks to pull in the capital, or 2 or 3 or more like-minded angel investors will come and give you the funds. Usually they will use their own money because they are already affluent people, very rich people. Their bank balance is overflowing. So what they will do? They will use their own money to help out the startup companies. Whereas venture capitalists, they are well organized group of people with very strong team and who keep searching for avenues where they can park money and make huge profit. So venture capitalists manage their funds more strategically. They will do more detailed due diligence. Then they will put their money. Though angel investors usually represent individuals. So you'll find more angel investor are individuals like you or me, but they can also be in the form of some kind of limited liability company or a business or a trust or an investment fund. So sometimes what they do, they create some kind of fund, some kind of trust, and from that fund or trust, they will help the angel, they will help the startup companies. So angel investors who seed startup that fail during their early stages lose their investment completely. One of the risks to the angel investor is that if the business is not successful, they can lose the entire investment. But they are mentally prepared for that. Their objective was not to make too much of profit. The objective was to help a startup company, and if that startup company fails, they can lose the money. That is why professional angel investor look for opportunities for a defined exit strategy, acquisition or initial public offering also. But there can be professional angel investor who would enter into an agreement where they will want a clear exit strategy. That is, they will say we want to exit after 2 years or 3 years, or the company will have to be taken to next level, that is IPO, so that I can receive my funds back.